Stocks rocked. Jobs still rocky. Is all this indicating the economy is about to get clocked? Hi, everyone. I'm Brenda Butner. This is Bulls and Bears, and here they are, the Bulls and Bears this week. Gary B. Smith, Jonas Max Ferris, John Layfield, along with Lisa Booth and Nomi Konst. Welcome to everybody. Okay, Gary B., first, stocks tumble, then jobs stumble. Both signs the economy could crumble again?
I think so, Brenda. I hate to invoke the Voldemort of the financial world, but it feels like 2008. I know that's a little doomsday-ish, but I look at a couple different things, Brenda. One, what is the stock market doing? We all know after the past few weeks, it is hurting. Friday's action was especially distressing, coming right before the holiday weekend. The other thing is people look at their biggest asset. Do they have a job, and are they making any money? Well, a lot of people bought homes in 2006, 2007. They're still underwater. Two, we got the labor force participation rate, the highest or the lowest it's been in about 40 or 50 years. And three, wages have not inched up in decades. You combine all those, Brenda, I don't see a very strong economy at all.
Wow, John, 2008, stocks were cut in half in basically about a year. Of course, they came back, but that's pretty serious business. Do you agree?
I do agree that there is some historical precedent to this. I'm not sure it's going to be as bad as 2008, but you look at what happened in 2008. You also look around what happened at 2000 when the internet bust. The S&P goes from 1,500 down to 1,000, both times, approximately. But also, if you had bought the S&P in 1995, it's at 500. It's about 2,000 right now. That's a 4-time gain in 20 years. You know, Ronald Reagan oversimplified it. Markets go up and markets go down. But that is really the case right now. If you are in the market, you're going to be okay long term. That doesn't help you short term because there is another historical precedent. 1946 and 1974, the market acted almost exactly the same in August and the first couple days of September, and what followed was a 10% drop in the market. I'm not sure that's going to happen. I think it certainly is possible because what you're seeing right now is a repricing of stock markets worldwide because of a global growth slowdown. And in the States right now, we're creating jobs, which is excellent, by the way, but we're not creating the jobs that we need, and we have a skills gap because we have structural problems with education, and that's our biggest problem.
And we're not creating jobs, Nomi, that pay that much. Wages are basically stagnant.
I actually agree with you guys on this. I think that, the issue that we're facing in this election is going to be income inequality. It's about how the jobs that are growing are the low-wage workers, and the educated workers, people who are getting out of college, yes, they're finding jobs, and their unemployment rate is lower than the uneducated unemployment rate. There's still a gap, and it's a pretty large gap, and it's hurting the middle class.
But Nomi, this is after 8 years of a Democratic administration.
Yeah, we had to fix the economy first. Unfortunately, we suffered a major problem in 2008. The reality is we have had 8 million jobs. We have had 8 million jobs in the past 3 years. That's huge, and that stimulates the economy. But people don't have extra money in their bank accounts. Millennials aren't even thinking about buying houses right now. So the fact that millennials don't want to buy houses, they don't want to buy cars, guess what? They're going to be the largest generation in 5 years. That's a huge issue.
Okay, Jonas, what's your take on the economy, on the markets?
I think all this 2008 discussion is 2008, so to say. What I mean by that is I'm actually with Gary.
Fergie.
I'm with Gary, except for I would go back to 2000. What I mean by that is I've been pretty optimistic about the economy and the market the last few years. This current problem smells to me like 2000, where there's an underlying overheated part of the economy that was built up in a bubble. Then it was tech stocks. Now it's oil and gas and natural resource exploration globally. With falling commodity prices, is really the heart of what's going on right now. There's going to be a lot of fire. This job report we just saw, that's where the jobs are going away. And if that intensifies, if we get down to $25 oil, $1.50 gas at the pump, you're going to see more and more people fired in all those growing areas, both in our country, but mostly in Canada and emerging markets. It could spiral and take the whole economy down like that dot-com bubble. It's not as bad as 08. Everybody doesn't have a piece of this like we do with real estate. It's not all done with leverage, but it's definitely a big enough piece to bring down some countries and possibly cause our next recession relatively soon here.
Okay, Lisa, I'm getting a little depressed.
Well, and it is depressing, Brenda. There's a lot of uncertainty out there right now, and it's going to curb consumer habits, and it also could affect businesses. And look, to Nomiki's point, we've seen income inequality get worse under President Obama. Top earners are making more, and it's middle-class families are the ones who are getting squeezed. And if you look at food stamps have increased 45%, I believe, under President Obama, and the poverty rate has soared. So look, income inequality has gone worse under these policies from President Obama. But look, more than anything, this regulatory state that we've seen is creating even more uncertainty. If you look at something like Obamacare, it's costing businesses in this country tens of billions of dollars, and it's creating great uncertainty and preventing businesses from growing and expanding.
Lisa, people were going broke and bankrupt because they didn't have access to health care. You know, President Obama instilled middle-class income tax credits.
Well, Nomiki, actually, premiums have increased under Obamacare, so that's
but
not
people
quite
aren't
right there.
bankrupt,
Look what we've
though.
seen. Middle-class well, because President Obama's policies he's doing everything he can
Is he setting
through
tax
regulation
policy or
after
is it
regulation
Congress?
to prevent economic. For the first time in United States history, more businesses are going under than are being created, Nomiki, and that's under the regulatory nation. And yes, it is absolutely true. And that's happening
74%
under
of
President
millennials are
Obama's
starting
policies.
businesses. That's crazy. And
Well,
why are they
youth
starting businesses? Because
unemployment
corporations
is incredibly
are
high
providing
right now
them because
under
corporations are
President
going
Obama
overseas.
also.
Stop. You guys, don't talk over each other. Great debate. Gary B., let me ask you a question, because a lot of Americans out there are looking at their 401ks and saying, up one day, down the next. What do I do? Do I sell? Give them some advice.
Well, a couple things, Brenda. Just as an aside, off camera, Nomi whispered in my ear that she really thought Obama was a terrible president. So I didn't want to reveal that, but I think it must be revealed at this point. Okay, second of all, what should people do? The sage-old advice, I think, is still valid, as cliche as it is. Don't look at your 401k. Look, if you're going to do anything right now and you have some funds, now is probably a good time to invest more, because every technical signal, looking at the chart, says right now, invariably, unless this is a horrible, like 1929 kind of issue, 1935, the market will be higher a year from now. I would stay pat, and if I have extra money, I would probably start buying right now rather than anything else.
John, do you agree with that? Is this a buying dip? Or more
Absolutely. I've got a ton of sell limits, stop buys on my portfolio right now. I'm trying to get into a lot of different stocks right now. Some I'm able to get into. I think if you're looking at individual stocks right now, I always say it's a stock picker's market. Look, that's the dumbest thing I've ever heard. It's always a stock picker's market. Now is the time to put a buy limit on your stock. Try to get into that stock if you can. And by the way, with Gary B., I talked to Nomi the other day when I saw her, met her at Fox. She said the same thing to me. So
yeah.
I think
it is. I think it's very true.
You want to hear from Nomi? You guys all get on and to hashtag Bulls and Bears, and you tell her what you think.
Oh, great.
Okay, Jonas, I want to bring up a point that you talked about, which is very good, which is the energy sector is essentially losing tons of jobs. But isn't there a bright, a silver lining to this, in that gas prices are going down and down? People have more money in their pockets.
It's good. Look, commodity bubble is not a great thing. It raises costs of home construction and gas driving. To a point, we want it to come back to where like it is now. But if it continues, that's my fear. Like, this is a good time to get in the market unless commodity prices continue down and there's more layoffs, more defaults on all the loans that were taken out to build and mine for whatever nickel and everything around the world. So if it gets worse from here, it's going to cause a big market crash and an economic problem. I don't think it's going there yet, but I am concerned that you're going to get too much of a good thing, which is, really cheap copper and really cheap gas. You don't want it to be that cheap. You just want it to be nicely cheap like it is now.
Lisa.
Well, I think back to the energy production point that you pointed out. Look, I mean, a lot of that's happened. The reason why we've seen gas prices decrease is because of hydraulic fracturing and horizontal drilling that's happening on private and state lands. It's not happening on the federal level. We've seen President Obama has done everything he can to rope off federal lands and prevent that energy production from happening. So that's a lot of jobs there that are being prevented from being created.
There's not going to be any jobs at these prices anywhere if they let you drill in Yellowstone National Park at this point. So that was true at $100 a barrel and up.
Well,
Yeah,
but
Jonas,
look at a state like
There's a
North
big point
Dakota.
It's not just oil and gas. It's all commodities. They're all down a lot. So you can't pick one area because of regulations. These are other countries
but
that don't
Jonas,
even have
they're-
regulations.
Hold on, Lisa. Let me get John in here.
Sure.
Jonas, that's a great point, but what you're talking about with the oil and gas, but there's some of the most innovative people in the world. What happened after the internet bust was these companies that came out of that, your Cisco's, your Amazons, these companies became your biggest companies in the world. These companies are learning how to deal with $40 a barrel oil. They are going to figure this out, and once they do, they are going to rejuvenate this entire energy sector because they're figuring out how to do it at a lower price.
And like the dot-com bubble, 80% will fail in the way to that.
Okay, Jonas.
I don't think it'll be 80%. I disagree there.
All right, guys. Jonas, was Nomi talking to you last week, too?
He's too conservative for her.
Okay, all right. Thanks, guys. And Cavuto on Business in about 20 minutes from now. Hey, Neil, what do you got?
Hey, Brenda. Well, look who is gearing up to slow that Iran nuke deal down. Is this why anti-establishment candidates are surging? And cities out of money, taxpayers out of patience. Why this rage is about to get very real for you. We'll see you at the bottom of the hour.
You will. We can't wait. But up here first, thousands of people desperate to get out. Is it time to take out ISIS once and for all?